To start off with, I wanted to go and ask you about some of the common mistakes that you see your traders make time and time again.
Thank you so much for having me, David. So yeah, it's really interesting. One would think that investors and traders have different challenges, but in the end, it's always the same challenges. It's greed, it's fear, it's regret, it's the fear of missing out or the fear of future regret. So the common denominator as humans plays out in both areas, whereas the parameters of trading or investing are vastly different, of course. Now, the challenges that investors face versus traders are a little bit different because, of course, there's a different time scale where day traders or swing traders, they have to make decisions really, really fast. And investors, they have a little bit more time usually to, clear their mind and make a really solid decision. Not that they always do, though.
Absolutely. So emotions can get in the way, particularly in a trading environment where you've got to make them pretty rapid fire on occasions. So how are some of the things you can go and put in place to go and help prove your odds and actually go and make the right trade? Or if you're holding onto a trade, continue holding onto it.
I'm currently working with a really interesting investor. He's a value investor over in the States, and he's amazing, right? He has this really big picture brain. He's able to think in multi dimensions and connect different dots together and create a scenario for his trades. And his specialty is finding beaten down, hated stocks and that have been basing for a number of years and see the potential of how they could come out of the base and just really skyrocket. That's how he has made tens of millions of dollars. And you can see it came solid out of the structure. And he essentially sold at $36. Now, his decision-making process was solely based on fundamentals of the product, fundamentals of the company, the macroeconomics in that specific country, and cycles. So you can see 4 or 5 different areas, pretty much like fixed income traders. He pulled data together to create that scenario and did really well at $36, or so he thought. And then a news came out, which was a political news, and he thought that the stock is going to be sold off. So 2 days the stock got sold off, and he got out. He thought, nah, I don't trust it anymore because his emotions came in. He is really interesting because he actually grew up as a foster child, so he deals a lot with abandonment, and he has the fear of abandonment, so he left the stock before the stock could abandon him, so to speak. And we identified that as we explored his driving factors to exit the stock. And also he abandoned his stock to, keep the profits before someone could take it off him.